Stocks. Joining me right now, Jenny Horne, co-host of Next Gen Investing. We were talking a bit about Tesla, also some of the comments that Elon Musk made. You're going to share this story with us now.
So I will say that I know we're down about 6.5% and some change this morning, but I will be very curious to see where we close today. There's a lot of time left. We haven't even opened yet. So it's already amazing that you can see as far as, sure, overwhelmingly, we saw a disappointing response to earnings that was not aided by the earnings call. Frankly, I tuned in and he sounded so just disinterested or maybe just exhausted, frankly, and saying positive things like we expect to be the most valuable company one day. We expect autonomy to be more unveiled by the end of this year. But some of the vagueness, I think, was the concern, as it a lot of times is. I mean, we had one particular question that was focused on like the robotaxi unveil and basically timelines and what they were doing to handle the added supply chain. And the response was so vague, it was like they didn't even answer the question at all. And so as far as hanging on to some of the tone from the overall call, that is not what you want to take away. Also, Elon Musk, of course, the headline all over the news this morning is him saying we probably could have now a few rough quarters ahead. So I think that was really in response to some of the EV incentives being rolled back, of course. But I do think that while the earnings report was definitely overwhelmingly maybe disappointing, there were still some potential positives to take away. Like, for example, of the analysts right now that are being surveyed by FactSet, no less than 6 actually raised their price targets, while only 3 have lowered them. So that goes to show that the analysts that cover this name actually are not as downbeat as the move would indicate. And Dan Ives, of course, at Wedbush did acknowledge that right now the market for EVs is difficult as overall demand has declined, but he's fixated on the progress that Tesla has made towards achieving Musk's goal of autonomous ride-hailing through the U.S. population by the end of this year. So one of the negatives in the report, free cash flow did fall well below expectations. Ives actually said this could be a positive, saying it was because Tesla continues to invest very strategically in AI, robotics, and batteries, as well as another Tesla bull, which was that of Benchmark, said, don't worry so much about the near-term challenges and tariff expectations of these EV tax credits because the company's balance sheet does remain stocked. So the company does have plenty of money, $37 billion in cash and investments to pay for its growth plans, as well as the autonomous humanoid robots and the development of AI chips. And yes, sure, some of the broader, I think, dreams and ambitions of this company were still definitely illustrated on this call. I mean, saying things like, we expect full autonomy eventually, we'll be the leader in that space. They also gave a ding to Waymo, saying we're far beyond Waymo, where our technology is far exceeding that. But I mean, it has to be a show me story, not a tell me story at this point. So finally starting to see the impact somewhat of European sales declining weigh on their results, and the overall concerns right now regarding like some of the specifics is what's frustrating, because I was like, there's no numbers being given. Even I was tuning in, like nothing specific was said, and that was frustrating.
Look, I mean, to the point of, you know, the things that they have going forward, whether it's energy, robotics, full self-driving, some of the analysts, as you noted, still like some of the, you know, ins and outs of Tesla, but seeing revenue falling, sales falling, competition is really heated up. In China, in Europe, you know, Tesla was the original, and then everybody followed suit, but they're not all Tesla. That's the difference. You know, when we think about the competitive landscape, BYD has been beating Tesla for some time, some quarters, sometimes, and may continue to do so.
And of course, what they have right now, which is really eating away at Tesla's market share in China, is they have that lower cost vehicle, which was, I mean, like completely somewhat disregarded on this call, which I know we've been waiting for more details on that. So that seems like it's being kicked down the road further. So yeah, I agree that you're seeing this erosion as far as its dominance. But if you actually look at the annual numbers right now, we are forecasting a modest dip for annual deliveries this year, but we're talking modestly. I mean, you see headlines like European sales down 60%, 70%. It would make you think that Tesla is nowhere close to last year or the year prior. No, I think we're just seeing signs of a difficult right right now overall EV market, but also, this is going to be a very challenged auto space, and thankfully, Tesla has some of the most U.S. manufacturing exposure of all of the major autos. So that is at least something to consider, especially because I can't imagine that growth will be easy to come by for, like Ford, GM, Rivian, even like your Neos, Lees. I think it's going to just be a difficult auto market for the next few months.
Understood. Let's turn our attention over to Alphabet. The CapEx spending increases, and folks really impressed with that because obviously there's some big ideas going forward. And this is a name, the Mag 7, that people thought was undervalued, and look at it got a nice move today.
It did. So finally starting to see some hopefully movement to the upside. We are up modestly here, looking though to open higher after we saw an upbeat report overall, beating on revenue and earnings. And the company also did increase now its CapEx forecast for 2025 to $85 billion. That was up $10 billion from February due to what they said was strong and growing demand for our cloud products and services. So, amazing that this company can still post 14% revenue growth. Higher than the about 11% the street had been expecting, but they're going to spend more on AI, of course, this year than had been previously anticipated. So they did highlight the fact that right now revenue for their cloud computing business was $13.6 billion. That was a 32% increase from a year ago. That was also better than expected. Last week, OpenAI did announce it expects to now use Google's cloud infrastructure for its very popular, of course, ChatGPT service. And Alphabet CEO did say they are very excited to be partnering with them. So net income increased $28.2 billion, up nearly 20% year over year. And their search and advertising units did still show growth actually the second quarter, despite, again, AI competition heating up, as search did bring in around $54 billion during the quarter. Advertising was roughly around $71.3 billion. That was up about 10.4% from last year. YouTube's advertising revenue also did beat expectations. That was somewhat of a weak spot last quarter. So again, I think it's frankly amazing when you have a company as massive as Alphabet is still posting basically double-digit percentage growth on a year-over-year basis for all of its major segments. That's astounding.
Yeah, and we talk about cloud revenue growth, Gemini, Vertex AI, all of these things that really just continue to grow. YouTube, if you talk to a lot of folks, younger folks, they're watching YouTube. The way Netflix was very hot, there's definitely, just some color here that we do have a lot of young folks really hot on YouTube and having subscriptions there.
YouTube is amazing. It's actually funny. It's how I watched or listened to the Tesla earnings call. So it all comes full circle. But I do think it's amazing the way that YouTube is almost like the forgotten segment of Alphabet because it's so big. I know search has garnered so much focus because of the legal concerns and the dominance it's held. Perhaps the concern is that waning. But YouTube is one of the largest streamer social media. It's to me, it's a cash cow right now, and it just gets huge amounts of views. So you can't discount YouTube. I believe it's like the second or third still like most streamed of all of the various platforms that exist out there in the world. So can't argue with the dominance of YouTube, and YouTube TV for all things sports. I will say NFL season is to me unmatched. So I am a big supporter of this segment of their business that I think frankly gets under discussed.
Yeah, I think you're right. Live sports is huge for all things streaming, and that's a good one. Jenny Horne, great to see you, co-host of Next Gen Investing. You can catch Jenny there. Thank you so much.